All information contained in this podcast is general in nature and does not consider your individual circumstances. You should consider the appropriateness of this information with regards to your individual objectives, financial situation, and needs. Welcome to Sharing More Than the Sheets, a podcast to help you and your partner make better financial and lifestyle decisions so that you can both focus on the things that you love. I'm your host, Michael Khouri, financial planner, green thumb, husband, and just dad. There's a lot of things happening at the moment in the world. In fact, there's always a lot of things happening in the world. But today, I was having a chat to a client and we were just discussing the current political climate and just a few things happening around the world. Now, what does a financial planner have to do with politics, you might ask? A fair bit, actually, because as an advisor, it's our job to help our clients invest their money. And when it comes to investing, whether it's superannuation, shares, managed funds, something that's in your personal name or a trust or company or whatever it may be, investing money usually involves share markets. And share markets are influenced by many different things. Political tensions, political, you could say crisis, events, whatever you want to call it, it all affects the share market. As an advisor, we talk to our clients about these things, and we don't have a crystal ball, of course, but our job is to help them be informed on what's happening or what has happened. And it was an interesting chat because we were just talking about what's happening at the moment, and I just mentioned that, there's always something going on in the world. And when I said that, it just really got me thinking that there really is something always going on in the world. Heraclitus is a Greek philosopher, and he said that change is the only constant. Okay, change is the only constant. And it's the idea that the only predictable thing in life is that things will always change. So things are always going to be changing. And it's very important to be aware of this. It's very important to accept this. And to know that there's always going to be something going on. There's always going to be something happening in markets. There's always going to be some president doing something to some other country or some prime minister announcing something or whatever it may be. There's going to be wars. There's going to be countries trying to get one over the other. And there could be some that are trying to control the market. There could be some that are trying to affect the market. And when I say the market, I mean like the stock market. But the most important thing for you as an investor to remember is that there's always going to be change. There's always going to be noise. There's always going to be things happening. And you can either listen to all the noise around you and watch the news every 2 minutes and quickly decide to make decisions and sell down some of your shares or super and put it into cash and quickly buy at the right time when stock markets look like that. You could do all that. But there's a very, very high chance that you're not going to get it right most of the time. In fact, it's probably impossible to get it right every single time. And there's probably a chance you're going to make some bad decisions. There's a chance you're going to make a lot more bad decisions than good ones. And you'll actually find that there's actually a statistic that I read once that said that statistically, investors that check their investments less often are more likely to actually make more money in the long term. Now, of course, there's exceptions to that, and it depends what you're invested in, and it's important to regularly monitor what you're invested in and or have an advisor that does it with you. But there is honestly a truth in the fact that those that watch the news all the time and act on what they hear and what they see are more likely to get spooked, are more likely to make decisions that they're probably going to regret. Or even worse, they're more likely to not make decisions. Now, I've talked about this before, the whole idea of inaction, the idea of doing nothing. And I regularly meet with people that tell me they've got money, they've got savings, they've got or the ability to borrow, but they just haven't for years and years because there's always been something going on and they don't know when the best time is. And this fear and this the fact that they've let the noise get to them has created inaction, and it's put them in a scenario where they've literally done nothing, and this particular couple, we were just having a chat about the share market, the property market, and they said it themselves, look, if we had just done all this when we wanted to, we would be so much more well off right now, and they were looking at it just about 7 years ago. So there is a cost to doing nothing. And of course you can make bad decisions, and that's where it's important to get advice and to make sure your decision is calculated and you're considering all the risks. Yes, no one has a crystal ball, and I'm not saying chuck your money into the market now because it's guaranteed to go up. I'm not saying anything like that. What I'm just saying is that there's noise, and it's how you manage that noise and how you analyze it and how much of that noise you expose yourself to and what type of noise you expose yourself to, which is going to make a significant difference to your success as an investor, to the success and growth of your superannuation. So yes, there is a lot going on in the world. Yes, there was a lot going on in the world a year ago. Yes, there was a lot going on in the world 4 years ago, 5 years ago, 10 years ago, 20, 30 years ago. There's always a lot going on in the world. And no, you are not going to predict every single possible perfect financial decision that should be made. No, you are not going to buy at the absolute perfect time every single time. You're not going to sell at the perfect time. The key, and you're probably trying to work out, Michael, so what's your point? My point is, when it comes to investing, if you've calculated your risk and if you have a strategy and you have a plan, then you should be comfortable investing money knowing that markets could go down tomorrow. As an example, if you're investing something which you probably need in a year or two, you are most likely not going to put it into something risky. If you're investing something which you won't need to touch for 20 years, for example, yes, you're probably going to be able to tolerate some risk, because if markets drop tomorrow, literally the day after you invest, you can wait 6, 12, 24 months for it to go back up. You can wait 5 years for it to go back up. You've got that time. So understanding your investment time frame is massive. Having advice is massive. Show me, I've said this before, I say this all the time, show me your friends and I'll show you your future. If you surround yourself with paranoid people, you're probably going to end up paranoid as well. There's nothing wrong with being paranoid, don't get me wrong, but if you surround yourself with people that are too scared to make decisions because they think the sky is falling, you're probably going to end up like that. Whereas if you surround yourself with people like a good financial advisor, like a good coach, a good doctor, whatever it is, professionals that you surround yourself with can help you make informed decisions, and they can help you understand the risks of certain things. They can help look at things from an outsider's perspective, take out emotion, and help you make calculated decisions. Because the more decisions you make, the more likely you are to make better financial decisions, and in turn look back in 10, 5, 10, 20 years and be glad with what you've done, be glad with what you've achieved. Yes, you'll look back and have some regrets. I can almost guarantee you that. But overall, you're going to be happy that you made the right decisions. You stuck your neck out. You had a strategy. You stuck to it. And you didn't let the noise get to you. Thanks for joining us on Sharing More Than the Sheets. Please make sure you subscribe to be updated with future episode releases. And feel free to share this episode with any friends or family that you think it might benefit. Please visit us at sharingmorethanthesheets.com.au to submit questions or requests for future podcast topics. These podcasts have been brought to you by Better Financial Planning Australia. To book a 15-minute phone chat, visit betterfinancialplanning.com.au.